Home buyers face bigger monthly payments after 4 major commercial banks raised their prime rates for the first time in 4 years. This comes after the Hong Kong Monetary Authority followed the U.S. Federal Reserve and bumped up its base rate. Macy Mock reports.
HSBC took the lead among Hong Kong banks, raising its prime rate by 12.5 basis points to 5.125% from tomorrow. Its Hong Kong dollar savings rate goes up by 12.4 basis points to 0.125%. HSBC subsidiary Hang Seng Bank increases its prime rate by 12.5 basis points to 5.125% from Tuesday. Other banks followed suit with the same level of increase, bringing Standard Chartered's prime rate to 5.375%. and that of the Bank of China Hong Kong to 5.125%. The banks acted after the Hong Kong Monetary Authority raised its base rate by 75 basis points to 3.5%, the highest in 14 years. The city's de facto central bank followed the U.S. Federal Reserve, which increased its benchmark rate just hours earlier to try and reduce inflation. Higher interest rates mean that home buyers will have to pay more every month for their mortgages.
The public should be prepared for banks to increase the commercial interest rates and carefully assess and manage the relevant risks when making property purchase, taking out mortgages, or making other borrowing decisions.
Financial Secretary Paul Chan expressed concern about the economy.
External demand will suffer because of the high interest rate environment. Consequently, our export will suffer. In fact, the second quarter export of Hong Kong has dropped by more than 8%. So we have to be very careful. Economic-wise, one of the key drivers of our economic growth, that is exports, will be affected.
But Chan doesn't think that the property market will be affected greatly, citing supply and demand and the employment situation. Macy Mock, HKIBC.